It is Friday evening, March 13th, 2026, and this is our monthly update for the SOXL challenge. SOXL closed today at $50, marking a significant drop from last month's $64. The volatility has been intense. Looking back at the bigger picture, we saw SOXL peak at $70 on July 11, 2024, followed by the devastating crash to just $7 on April 7, 2025. The recovery that followed was absolutely remarkable. SOXL climbed all the way to around $72 not once, but twice. First on January 29, 2026 and again on February 25, 2026, actually surpassing the previous 2024 peak of $70. However, this month brought turbulence. SOXL plunged to $44 on March 9 before recovering to close at $50 today. From this SOXL daily chart at Finviz, the characteristic pattern is clear: high volatility within a strong medium to long-term rising trend. SOXL maintains a positive long-term stacked alignment, still trading above its 200-day moving average. However, SOXL is now positioned below its 50-day moving average, which signals some near-term weakness. A decisive break above the $72 level would confirm the bull run continues. My prediction remains that SOXL will eventually push above the $72 double top line in the next few months. We've seen this pattern before. Remember the similar double top at $50 at the end of October and mid-December? SOXL broke above that $50 resistance in early January. Interestingly, that $50 level then became support in early February, where SOXL successfully bounced, although SOXL did briefly dip below this $50 support for 2 days on March 6 and 7. Let's examine the SOXX daily chart in detail. SOXX reached an all-time high of $368 on February 25, 2026. Today it closed at $331. For those new to the channel, SOXL is a triple leveraged ETF that magnifies the daily movements of SOXX, which tracks leading U.S. semiconductor companies. As of today's close, SOXX sits below the SMA 50 purple line but remains above the critical SMA 200 green line. Looking at the timeline, SOXX broke above the SMA 50 purple line on May 6, 2025, and successfully cleared the SMA 200 green line on June 4, 2025. Since the Golden Cross, SOXX has slipped below the SMA 50 purple line 4 times, in September, November, December, and now March. The key question is whether SOXX can reclaim the SMA 50 purple line soon, or if it will need to test support at the SMA 200 green line. We witnessed the Golden Cross formation on July 8, 2025, when the SMA 50 purple line crossed above the SMA 200 green line. The previous Golden Cross occurred back in January 2023, and that signal launched an incredible 18-month rally. If history repeats itself, we potentially have 10 months of upside remaining, lasting until January 2027. On this weekly chart, SOXX has maintained position above the SMA 20 black line since May 2025, which demonstrates remarkable strength. Even more impressive, SOXX has stayed above the SMA 200 green line most of the time since November 2010. I fully expect this bullish pattern to continue for many more years. Now let's talk about what happened in the markets this week. The U.S. stock market experienced a turbulent week from March 7 to March 13, 2026, with the Nasdaq bearing the brunt of investor anxiety. Escalating geopolitical tensions and mixed economic signals created a perfect storm. The tech-heavy index struggled to gain any traction as concerns over the Iran-Israel conflict continued weighing on sentiment, pushing crude oil prices near $100 per barrel and raising serious fears of prolonged inflation. Adding to the pressure, the Federal Reserve signaled a more cautious approach to interest rate cuts following that weak February jobs report showing 92,000 jobs lost and unemployment rising to 4.4%. This stagflation scenario, combining economic weakness with persistent inflation pressures, created an extremely challenging environment for high-growth technology stocks. The Nasdaq attempted several rallies throughout the week but repeatedly failed to break above key resistance levels. QQQ remained unable to reclaim the SMA 50 purple line as investors rotated away from speculative positions into defensive sectors and energy stocks. The semiconductor sector faced particular headwinds this week despite underlying strength in AI infrastructure demand. New export restrictions on advanced AI chips to certain countries, announced by the Commerce Department on March 10, triggered sharp sell-offs in major chip stocks. Investors grew worried about potential revenue impacts from restricted markets. However, the sector showed resilience midweek following TSMC's announcement of better-than-expected March revenue guidance and confirmation that its Arizona fab construction remains on schedule for 2027 production. Memory chip makers like Micron and SK Hynix experienced volatile trading as analysts debated whether high-bandwidth memory demand for AI applications could offset weakness in traditional server and PC markets. By week's end, semiconductor stocks had partially recovered from their lows. SOXX managed to hold above its SMA 200 green line despite all the turbulence, suggesting that institutional investors still view the AI-driven semiconductor cycle as intact despite near-term regulatory and geopolitical uncertainties. Now let's review my current holdings. I'm not adding new shares this month since I've already invested about $21,000 during the first 2 years of this challenge. Going forward, I'm sticking to my plan of approximately $7,000 in annual investments. In my Roth IRA, I'm holding 354 shares at an average cost of $24.71. The current value is approximately $17,800 with unrealized gains of about $9,100, representing a 104% return. My individual taxable account holds 525 shares with a current market value of approximately $26,500. Combined, that's 879 total shares worth about $44,300, significantly down from last month's $56,600. My core philosophy hasn't changed. I will buy and sell based on the SOXL surge strategy, a term I coined based on the semiconductor sector's pronounced business cycles. It's a long-term swing approach tied to SOXX trends. Looking at the historical pattern on this weekly SOXL chart, major dips appear every 2 to 3 years. We had $4.33 in March 2020, $6.21 in October 2022, and $7.23 in April 2025. Similarly, we observe peaks every 2 to 3 years with $74 in December 2021 and $70 in July 2024. The pattern clearly shows that major dip prices trend higher in each cycle, rising from $4 to $6 to $7. I also expect the peak price in this current cycle will be substantially higher, possibly $122 or even beyond. In this current cycle, I may look to sell SOXL when SOXX reaches about $500, or in October 2026, whichever comes first. Of course, this target and timing can be adjusted as conditions evolve. For more details on my 2026 exit plan, check out my short video titled SOXL $122 Target. My 2026 exit plan. Despite the volatility we're experiencing, my conviction in semiconductors remains rock solid. AI, cloud computing, and high-performance computing are still in the early innings of a massive transformation. Patient investors who stay disciplined through the inevitable ups and downs will likely be rewarded with substantial long-term capital appreciation. That's your March SOXL Challenge update. We're in this for the marathon, not the sprint. If this update added value for you, smash that like button, hit subscribe, and drop your thoughts in the comments. Stay disciplined, stay patient, and keep building that wealth mindset. I'll catch you next month. Peace out, SOXL family.